Alright, good day everyone. Welcome to my YouTube channel at Elimination of NG. Kindly subscribe to the YouTube channel and click on the notification bell so that you can have access to any of the videos I'm going to be dropping later in the day. So right here I have group account. So we're going to be taking group account today, and I would like to put it through on how to calculate the statement of financial position for a group. As we all know that we have organizations that are parent companies, and we also have subsidiary companies. Okay, subsidiary companies are being owned by the parent companies based on their interest and their shareholding. For example, most of these parent companies have controlling interest, and due to the amount of shares or the percentage of shareholdings that they have in this company, so they control basically the business, and any decision made by the subsidiary companies are vetted or at the discretion of the parent company. So, in this case, if a parent company has 100% ownership, it means there's non-controlling. That means that we don't have anything that has to do with non-controlling interest, meaning that there are no other individuals or shareholders that have shares or interest in that company. So right now, this question that we have here, we're told that Mr. Top PLC Group acquired the entire equity shares. So if the company acquires the entire equity shares, it means that this company has 100% ownership of this subsidiary company. So in this case, we're going to say that. So let us start with the workings, so that we don't take much of your time. So we have the workings, yes. So workings. So as we progress, the various definitions and terms that has to do with group account, I will take my time as much as possible to explain them. So here we have Mr. Tor PLC. Let me use the abbreviation Tor PLC. Okay, let me just say Tor PLC owns Short PLC. Okay, Short PLC. So what is the total ownership, which is 100%? Okay, in this case, number two, do we have NCI? No. So NCI is 0% in this case. So then the next one is for us to be able to determine the net asset acquired. So what is the net asset acquired by this company? So we have to look at the equities and liabilities of the subsidiary company. So for short PLC, so the equity owned, we have ordinary shares of let's say we have 600,000 naira. Okay, at the day, we have to distinguish a day of acquisition and also the day of consolidation, and we also have the post acquisition gains. Okay, so in this case, a day of acquisition, the ordinary shareholding, which is valued at 0,000, still remain the same at date of consolidation. There is no changes, so we have 600,000 stated. So we also have share premium. So the share premium was 300,000 as at the date of acquisition and 300,000 as at the date of consolidation. So in the case of retained earnings, okay, we're told in the question, if you look at the question very well, we're told that Mr. Short PLC was, the date of acquisition, Mr. Short was 1,450, 1,450,000. Okay, so let us put that there, 1,450,000. And during the time of consolidation, the retained earnings did not change. Okay, so we have 1,450,000, 1,450,000. So what's our post-acquisition gains? Nothing. We have 0 here. We have 0. We also have 0 here. Okay, so let us add up. 600 plus 300, 900. This will give us 2,350. This will give us 2,350. So let's close that. Okay, so let us move on. So right now we've been able to determine our net asset acquired, and we don't have any post-acquisition profits or gains on the retained earnings. Okay, so let us move on to calculate the goodwill. Number 4, goodwill. Goodwill. So the goodwill is determined by what? By comparing the purchases consideration with the net asset acquired. Okay. So because we do not have any NCI, so let us say what is the investment? Okay. Look at the question here. We have investment in Mr. Short. Look at it here. So we can say we bring down investment. So how much did we invest? So the company invested 2,100,000. And do we have any NCI? No NCI. That is zero. So what is the total amount of net asset acquired? So the net asset acquired as at this period. So we have 2,100,000 was 1,400. Sorry, that is 2,350. Okay, 2,350. So in this case, we have negative goodwill because so negative goodwill of 200 because the amount we are paying, this is purchases consideration. The amount we paid was 2,100 to acquire 2,350,000. Okay, in this case, this is regarded to as negative goodwill. Negative goodwill, and this will be added back to the retained earnings. Okay, it will be added back to the retained earnings. So let us move on. Let us move on so that we've been able to do the calculation, and let us move on to prepare the statement of financial position. We should know that this preparation is in line with the provision of IFRS 3. IFRS 3, that is the International Financial Reporting Standard 3, which talks about business combination. Okay, business combination. So this makes provision in regards to how we are to prepare the consolidated what account, okay, which we know as a group account. So let us go ahead now and prepare the group account. So we call this the consolidated statement of financial position. So call this. So let's go ahead. Consolidated statement of financial position as at, so we have 31st of December. So what is the date that we have there? Let us check. In the question, we have 2018. 31st of December 2018. 2018. So let us go ahead and prepare the statement of financial position. So we have the assets. Okay. For the assets, we have the non-current assets. We have the non-current assets 3821. So 25. So here we have for the parent company, since we say we are consolidating, that is when we say consolidation, we are adding the asset owned by the parent company with that of the subsidiary company. So when we add this together, we give us 63. So we have the current assets. When we add this together with this, we give us 45. Okay. Since we already treated investment, okay, so we don't need to bring this back. So because we have used it to determine the goodwill, either negative or positive goodwill. So what we're going to consider now is that we're going to consider the 6,300 and the 4,500. So that is plant and machinery and current asset. Okay, so let us go ahead and prepare this. Okay, so we have plant and machinery. So from our calculation, we have 6,300, which is 6,300,000. We also have current assets from that calculation we did. So we have 4,500. Okay. So at the end of the day, we have addition of total assets as 10,800. As 10,800. Okay. So let us move on to the equities and liabilities. Equity and liabilities. Okay. Liabilities. Okay, so let us and liabilities. So let us move ahead, go ahead and prepare the equity and liability. So the equity share of the parent company only. That's what we're going to consider, okay? For the parent company, what's the equity share for the parent company? Parent company has 2,000 equity share. We consider this too, and we are going to revise this retained earnings because we have done the calculation here, okay, to determine the retained earnings. So we have the retained earnings that we've calculated, okay. So for us to be able to determine the amount that we are going to post to the okay, let us do that now. Let us just quickly do that. So number five is a parent companies retained earnings, okay, retained earnings, okay. So for the parent company, we have the total retained earnings as 2,000 900, okay, 2,900. So that's 2,900, okay. So 2,900 plus 200, 2,900, okay. 2,900 plus 250, okay. This should be 250, sorry. Negative goodwill should be 250, not 200. So that's parent. That's 2,900. So 1,000, okay. Plus 250 plus 250, which is 0,511, 3,150, okay. This is the negative goodwill that we have added. Goodwill that we have added to the retained earnings. So that's 8,150. So that's 8,150, okay. So we have 3,150 as the amount to be posted to the parent company. So what's the value of the equity share of the company? The equity share of the parent company is 2,000 from what we have here. So we have 2,000. So we also have the share premium as 1.5. So let us go ahead and record that. So 2,000. We have share premium as 1,500. And we also have the retained earnings. The retained earnings based on our working 5 is 3,150. Okay, that's 3,150. So when we add this together, we're going to have, so that is this is 6,650. That's 6,650. So in the question we have payables. This is a current asset. So we say payables. So this is a current asset. Okay. That is payables. So what is the amount of payables that we have in the question? So payables, we have, that's current liabilities, okay. Current liabilities, that is, sorry, I said current asset is current liabilities, please pardon me for that. It's current liabilities. So current liabilities, that is 2,000. Okay. So let me just take this off. So that's 2,000. So 2,000. So that will give us 8,850. So the payables, the current liability is 2,000 plus, that is 2,000 plus addition of that of the subsidiary. Let us look at the value of the payables or the current liability for the subsidiary. That is 2,150. So we're going to add it together so that we don't make that mistake. So plus 2,150, 2,150, 50. This will give us 4,150. So 4,150 at the end of the day, we have 10,800. So the account is balanced. So we have a balance account of 10,800. That is 10,800,000 based on what we have here. So you can see that the account has balanced. This is how you're going to treat your group account. And please kindly subscribe to the YouTube channel and also follow my YouTube channel and share the link with your colleagues and friends and classmates